sideways. And sometimes you have just volume either on the peaks or at important bottoms or on the breakdowns. Here there was huge volume on the breakdown. Look at the volume today, Andy. Look
It's
at that.
huge.
Yeah, it's crazy, crazy. So this is just a warning sign, number one, because that crazy volume could keep going up. With hindsight, we'll know if ever the price does roll over, and then we're going to see, look, the volume was high. We had peak volume. So if anybody says there's no FOMO here, you're wrong. We're above anything we ever did in the 2000s. Now we're in 1970s type of territory.
Right.
There is even here's on the 2 month chart. Even here on the 2 month chart, we're up here there. Look at that. The GFC peak and the end of the bull run, exactly where we are now.
Good morning, Patrick. How are you?
I'm great, Andy. I'm great. Thank you, sir.
No, thanks for coming on. Just really quickly here to all my viewers and listeners that know, and there's those that don't know, this is Patrick Karim, Northstar Badcharts. We're going to talk about some silver here. Silver is exploding here. Let's talk about it. What do you see? What are the charts telling you? And this was such an explosive, quick move here.
All right. Well, okay, let's take a little I'll share my screen, of course, guys. I'll take a little step back. Let's see what launched all this. I'll put on the line chart. I'll remove all indicators. Let me just set that up for you guys properly. I'm going to put this a nicer color because people will complain. So this is the launch pad which launched most of this. Where's my line, guys? So I'm on the quarterly chart. So you remove a lot of noise, and the higher the time frame, the more data is compressed in each and single of those data points. So it smooths out a lot of the noise. But when you get these the coiling of price on the quarterly chart, and silver's been going nowhere. I remember like a couple of years ago, all the memes of the grandma that's on the porch, like I'm waiting for $100 silver, or the skeleton, right? Like I was trolled like a lot of back then. But that's the type of memes you see when the price is going sideways. So here was super beautiful back here. You had one touch, two, three, four, five, six touches of that breakout line, and then you had a breakout back here in January. I just posted that one on Twitter today. They're on X. This was a chart I did back in March, so Q1 of 2024. Remember, guys, you get breakouts. Breakouts are confirmed when the close of the candle that it's defined on breaks out. So this was Q1. There was just a few days left, and look, it was already starting to break out silver back then out of that descending line. So that's step one. And after that, you try to identify horizontal walls. Then once you close above that, then you're off to the races. So let's see just what happened right after that. Well, actually, I could just show you this chart there because I just annotated for everybody on X there. And after that, what happened here is we had the breakout of that descending line. So people could have already started, entering there at that moment, because I know people love to stack. That's fine, stackers. People say I accumulated at $10, $15. That's your strategy. But what a chart trader brings to the table, his edge is he wants to minimize opportunity cost. He's not going to accumulate here. He's just going to dump everything he ever had to accumulate on the breakout. So he avoids opportunity cost. He avoids risk. Yeah, because with hindsight, yeah, the price did go up. But let's say for some freak reason, we don't know, and we went down the lower probability route of the price going down. If you had accumulated during all this time in anticipation of that breakout, and that breakout did not materialize, kind of sucks. So what a chart trader brings is, while not all breakouts materialize going upwards, we do know that statistically we have better odds of moving upwards when we're breaking out, right? Because breaking out means you're doing higher lows. Breaking out of horizontal planes means you're doing higher highs. And here we had the breakout in Q1. Then after that, in Q2 or Q3, it rocketed upwards, and a retest of that wall. These are the all-time highs and the quarterly all-time highs in 1980. And here's support in the 2010 top. and then resistance here in 2020. So then retested from above, super, super, super bullish, right? So a chart trader is going to bring to you to the table the lower risk entry points where it's just like compress, compress, and exploding upwards. And look what happened after. It just we had this crazy move upwards, and it's just nonsense. Not nonsense, but it's
Euphoria.
but now I know, and people do not like me saying this. All our bank accounts are going crazy. All the stackers rejoice, rejoice, and then we're looking for situations to justify, either entering or holding on. I don't want to talk about holding on right now, but let's say people on the sidelines, and then they're going to look for a narrative, CME, silver squeeze, I don't know, rupture. Some of our members are telling me, Patrick, there's a shortage of silver. Like, you know, I don't care about all that stuff. I know it could have an impact, but you have to assume, guys, that there's probably something you don't know that could impact the price inversely to that bullish feature that you've analyzed, right? So you got to stay humble in that sense that, while there could be a shortage, the shortage could keep extending the shortage. It's like sometimes you think something can't get even worse. It's like some people are always waiting for the US debt to implode. Guys, people saying the debt should implode at 1 trillion, at 2 trillion. We're at 37 trillion, wherever we are. Nothing's happening to the US, right? It's like you have to stop with this thing that you feel it's extreme, but extreme could get even more extreme. And in a logarithmic world where they destroy purchasing power, stuff could just extend way longer than you would think. So, just my best advice, guys, look at the chart, spot these lower risk entries like back here, and tell me objectively. I don't want to. We'll zoom in on the short time frames, guys, but tell me objectively, do you find an equivalent entry point right here with the price doing a rocket ship move there? There's just not. Well, what's happening right now is we're just riding the fruits of all that hard work that silver did over those years. We're riding the fruits of that, right? The fruits of that hard labor. And what I'm going to show you here.
Let me interrupt you, Patrick.
No problem.
This looks eerily to 2002 to 2010-ish, that time frame.
Yes. Look at what I
Go
did
ahead.
here.
You're going to get there. Go ahead. Yeah, go ahead.
I did a copy bars. So essentially, I'm just replicating the move here that we just did from the bottom, the consolidation. So this huge pull flag move, I just replicated it just to show you with history, either you think it's something like that, consolidation, explosion, target reached, sideways up a little bit more. So from that analog, you could think there's some room left. If you started from here, explosion move, consolidation, explosion move, and then that was it. Then if I take it all the way up here and you think it's a replication of the 2008 move, up, down, and look at that, we're back already at that move here. So based on that, there's not much room left in the tank. Look here, even the 70s. Look at that consolidation, explosion. Look at that. There's a little bit of room left. I don't know, 20, 30%. That's on the short time frames could go even higher because that's on a quarterly close basis, right? You could rock it up, and by the end of the quarter, you could close back there. And
Mhm.
look at this even here, even the greatest moves in silver ever, we're probably more than halfway through it. If ever we replicate what we did in the 80s, and that's an end game type of move, you don't really want to see that right now. While you could see it, that was just a crazy move on a quarterly adjusted basis. You see, silver could even double from here, probably even go higher. So you have a range, but you cannot tell anybody, you cannot tell your viewers, cannot anybody that's there cheerleading this, happy their gains fine. Is there an uptrend? 100% we're in an uptrend. There's no bearishness, there's no downtrend. It's an uptrend. People could keep riding it. But somebody on the sidelines, and I'm not saying this to keep people on the sidelines, like by to be mean or anything. I'm just telling you guys objectively, you're not entering at the best moment. The best moment is when that thing just exploded, right? Look, I'm showing you
Right.
a previous analog move. So look at that. It's like I don't want to say the train could end any moment there. We're going to zoom in there and show some details, what to spot before you actually start panicking or start scaling out. Some people, they could wait until the daily chart fails and remove like 7% or 8%. And then when the weekly chart fails, they could remove 15%. And then they could remove the monthly chart fails, they could remove another 25. You could scale in and out. But this, when you look at this, guys, you have to accept that the that move there is it's you're more than halfway into it, and I don't know how much more room in the gas tank this has left,
Right.
but yeah, we're super stretched there. Look at that
We
historically.
are stretched.
And it's fine, guys. I know people, they say, Patrick, you're stretched, you can get stretched even more. Yes, yes, I understand all that. I'm just telling you that the best entries, which TA could have provided you, forget all the narratives. It's TA can provide you. Here's on the monthly. Here's the explode. Like TA can provide you that advantage. If you like, you okay. I love silver. I love the fundamentals, but please, I want some timing. I don't want to wait 2 years going sideways. It will provide that to you, but right now is not. You never buy in a rocket ship move there. It just doesn't make sense there. You have to wait until there's some type of, I don't know where it's going to be, but some type of consolidation here, and then you buy.
Right.
I want to just show you another version of the silver chart. This is with the Oanda. This I'm not a super fan of what I'm seeing right now. And again, guys, it's don't construe this as me like being long-term bearish. I've shown these maps, right? And like you're not, before you turn bearish, guys, you're bullish, right? You're bullish, you're bullish. It's rocketing upwards. You're bullish, you're bullish. Before it turns bearish, it has to go sideways first. Let's look at
Right.
here. I just have to reiterate that. It's not binary. So here you're bullish. Let's say I'm the 2000, whatever, it's going up. You're not bearish when the price goes sideways. But you're agnostic. You're not as bullish anymore, right? And then when you start losing those, depending what your threshold is, when you start losing those rising support lines, then then you're bearish when here. That's when you get bearish, right? When you lose that horizontal support. So if you could flip the chart upside down, what made you bullish back in the days has to repeat, but inverse. So when I say stuff, guys, I know it just rubs the people the wrong way there. I don't want to get anybody upset, but I'm just telling you that if I'm spotting some evidence that we're extended, people flip, oh, you're bearish. No, I'm just telling you, there's a possibility now of a slowdown. And if there's a slowdown, then eventually you open the possibility of a bear. But we're far, far, far away from that, guys. Okay. I just want to say that to avoid some of the hate there. So I
Hmm.
just want to show you what happens, guys, when peak volume and interest people go up. Look at the volume there creeping up here back in the GFC there, heading into that crazy top there. Volume crescendos up, and then after that, bam, you're at topping area. Here, look at the 2011. Look at the bottom here, guys.
Hmm.
2011 top. Look at the volume crescendoing up. While then after that, sometimes you get volume on the way down. Here, look at that. Look at silver squeeze. Look, peak
Yep.
volume here, silver squeeze, and then after that, we just went sideways. And sometimes you have just volume either on the peaks or at important bottoms or on the breakdowns. Here there was huge volume on the breakdown. Look at the volume today, Andy. Look
It's
at that.
huge.
Yeah, it's crazy, crazy. So this is just a warning sign, number one, because that crazy volume could keep going up. With hindsight, we'll know if ever the price does roll over, and then we're going to see, ah, look, the volume was high. We had peak volume. So if anybody says there's no FOMO here, you're wrong. You're wrong because that volume is people changing hands. It's either a whole bunch of people that bought here that are unloading and
Hmm.
a whole bunch of new people coming in. But whatever it is, there's huge amounts of transactions right now happening in the silver market. Huge. So this is all fine. But this is tough type of volume you see that you could see, and with hindsight, we'll figure it out there. Once we start losing, the daily chart, the weekly chart, if we start losing that, that's where you find tops. Okay. So
Hmm.
the best place to go there, it's when the volume is low and coiling like this there
Hmm.
and breaking out with the price. Where's a good example there? Here, something like that there. The price, it's you're averaging out, and then you have a breakout volume here, breakout volume on with the price breaking out. But crazy volume like that with the price already stretched, I'm not a fan of that, right? I just it's not a fan. Look, you want to see here, like here's a better example. Price here was breaking out here, and look what the volume was doing, breaking out here. Let's move that here. So price breakout with increase in volume, beautiful. But price being super stretched with crazy amount of volume, not a. I'm not a fan of that there. So let's keep that in mind for silver. I could zoom in. We could zoom in on the 4 hour chart, see how all this thing broke out. Here, remove drawings. This we did this for our members, or I don't know. So here you had I'm on the 4 hour chart. So cup and handle, fractals, right? TA works on all a whole bunch of doesn't matter what time frame you are, the yearly, the monthly, quarterly. So a beautiful cup and handle. That was a consolidation. We had lost rising support here. So then you just don't know what's going to happen after that. The chart resets here, exploded upwards, morphing this line into existence. And then after that, bam, it exploded. So right now on the 4 hour chart, it probably looks like once we're below this line there, it probably looks like it wants to cool down a little bit, do some type of correction. I could zoom out to the 8 hour chart, super stretch, but you still haven't lost that rising momentum. So it's fine, but I don't know, it looks like it's going to want to rest a little bit, let those moving averages catch up. The daily chart, remove all drawings, all good on the daily chart, not 100% stretch. So you could have a reset, a slowdown on the 4 hour, 8 hour chart without
Hmm.
damaging the daily. The daily, you could say you're starting to enter a daily defined correction or you're exiting the high rod zone, so the high returns over time zone, once you lose this rising support line. So until that happens, you're all good here. And there's still some room to go up. So this is the squeeze there. There's still more up room on the daily chart for silver, no issues there. But again, like the low risk entries, they're not up here. They are, you know, we didn't have three touches here, but they're somewhere down here. If you zoomed in on smart time frames, they're just a couple of days ago there, back on the November 26th. That was the shorter time frames set up telling you, look, you are stretched on the hard time frames, but if you want to play this as a trade and just like add a little bit and get a little more juice for you want to squeeze this a little bit more, it was a few days ago, not up here there, just
Right.
not up here. So it's not falling apart on the daily. What about the weekly? So on the weekly,
Same thing. It's exploded, but it looks really stretched.
yeah, we had a here you had a loss of rising momentum right here for the weekly. So what happens is that's the so here you were entering a low rod zone. So while the price after this point, so after October, the week of October 20th, even if the price is going up, you're not going up as the chances that you're going to go up as fast as you did from this breakout here. I'm going to put you a little here, we can move that here. This was the time to enter right here on this breakout. I'll just move it a week for you guys. See momentum breakout, distance from that 36-week moving average, price breaking out.
Hmm.
That was the greatest gains in shortest amount of time as you're distancing the moving average. It's just mathematical, right? If I'm able to distance a moving average upwards, moving average is following me, but I'm distancing it. That means the money's coming in, right? The buyers overwhelming the sellers. That's what TA brings to the table to write that. So this is an aggressive correction, or just it's a continuation of the up move. But because you've lost that acceleration, that speed here, as defined by that line, you're not going to have as great gains as you did at the explosion of the move. So here, there's a longer, more slopey line that's morphed into existence, guys. It's this one here.
Hmm.
So now that one's a little bit less steep. So this one's going to carry more weight if it fails. So you're on the weekly, you're still good, guys, as long as this
Doesn't fail.
doesn't fail, you're good. You're above that 36-week moving average, you're above the 12-week moving average, you're above a rising line. It's all good on the weekly. The people who entered properly could keep riding this. The people who are on the sidelines, I'm sorry you missed it. And that's going to be my speech. You know what I thought? There's two audiences, and often there's a confusion. And I'm going to try to find a way there to better explain this. There's always, when you do charts, I do one chart, but sometimes the audience, it's not for the same people. Sometimes there's a chart for the people that are already in and they want to know, am I still safe to write this? And then there's a chart for people who are on the sidelines. Or the same chart gives two different messages. It's not the same answer because I'm telling you, for the people who are already in, that you could stay in, people on the sidelines don't construe that as an entry point. But often people they'll say, "Well, hold on, Patrick, you're bullish on silver. How come I can't jump in now?" But it doesn't work that way, guys. There's because a train is rolling, jumping in could be dangerous for your health. You have to wait until it goes at the train station. It slows down. It lets you go in safely, and then you go, right. You don't jump in on a running train there. That's nonsense.
Mhm.
So always take it from the perspective, and I'm trying to do that myself when I sit down and I explain a chart. Do it from the perspective of who's the audience. Somebody on the sidelines wanting to know if they want to jump in, if it's safe, and now it's not safe, or somebody who's already in that bought much lower when the train was actually stopped and starting to explode, leave the station. Then those people, they're in the train, they just ride it wherever it goes. And I don't know, do you feel like that's contradicting
No, I think
speech?
that's actually well put. And I think that's exactly it. This is, and I see it. If you're trading silver, this is very high risk to jump in if you're looking to establish a position. And this is not advice. I'm only speaking for myself. There's no way in heck would I start establishing a position right here. And I do have positions. But it makes a lot of sense. It looks like it's safe if you are already in it. It looks safe until, again, you said it breaks that trend line. That all being said, I think too, you have to determine what you are and ask yourself, what am I? Am I a trader? Am I a shorter term trader? Am I a longer term trader? Am I trading stock or am I trading the futures? What am I doing here? Because then when you start answering that, you can stomach, if you would, downturns. You can ride and have the euphoria, if you would, of the upturns. But you have to determine what your personality is and what your goal is really. So if that makes
That's
sense.
that's golden. That's the best advice ever there. Not financial advice, but it's like a basic premise of any game, any sports. Like, what are you? Are you an offensive forward? Are you defensive forward? Because you have to know that before you go on the ice, right? You
Right.
gotta know what you're gonna do before you go on the ice. Are you gonna go crazy like Paul Coffey, or are you gonna stay backwards like a more defensive defenseman? You have to decide that before you play the game, or else you're gonna sabotage whatever's
Yeah,
happening.
then you're just chasing movements, if you would, and then you're panicking when things correct. And inevitably both things happen. So whether
Yes.
it's one or the other. So you just really want to determine who you are, what your goal is, and then make a plan and follow that accordingly. So that's the best advice. And I will say that's advice. That's the best advice I could give to a
Right.
person.
So
Talk a little bit about two things. Talk about the miners, if you would, silver miners, and maybe you can either go with the mining ETF, or you can just pull up like a first majestic or something like that. I
uh,
mean, that makes no difference to me. Just
they're
they're screaming right now.
Yeah, so SILJ, same thing as I'll show you SILJ and then I'll show you SILJ versus silver. And I could also show another cool chart there that I found. It's the AGQ, it's the silver bulls times two. And I could
Yeah.
show you its performance versus silver and show you why it looks bullish. There's still some bullish steam for silver because that other chart, that last ratio I mentioned you, is giving some good clues to what's happening in the silver market.
Yeah, please.
So these miners, they're I don't know, like we could zoom out there. I put SILJ guys, but I could have put PASS, Pan American New Price Scale, and I'll do the inverse. Check it out. I'm going to put PASS here, Pan American Silver, and then I'll put here ASA. No, I won't put ASA. I'll put a SILJ, just to show you that it's practically the. I'll put all that on the same logarithmic scale. Do that here. You'll see that if you want to get a longer data series for the SILJ there, sometimes it's like it's practically they all track the same capital flows. There, something like that. So where pass goes, SILJ goes. Where I don't know, AG, I think it's not like did AG recuperate recently?
Yeah, it's exploded up. I was looking at it
It's
this
going
morning.
upwards. So it's following those capital flows. First majestic, new price
Yeah.
scale. Let's put that on the log scale. It's right here. Log scale. Yeah, same thing. You see, the ebbs and flows of the SILJ, pass, AG, I think they might even be components of it. They're all going to track the same capital flow. So we could stick with SILJ, remove indicators. Here you go. So here's the monthly chart, but this is the same as silver there. If you're identifying low risk entries, we're way past it, right? Anybody here on the sidelines seeing 10% per day, 5% per day, 10%, 12, whatever in the minors there, it's all good and dandy there. And that creates FOMO because you say, I'm missing out. But sorry, again, I just like I might be hurting my reputation. I don't want to hurt people's feelings. People get like emotional, upset at me, but I do think that some people, a silent majority, do appreciate the objectiveness in what I'm trying to say, right? Because it's like in the crypto world. Remember when everybody's pumping crypto, everybody's happy, and then those accounts they blow up. I know that could be an easy route there for me to do, but I'd rather pump up silver when it's starting to do the setup and breaking out than be a super uber cheerleader right now when the price is like this, right? Again, because I'm saying that, guys, it doesn't mean I'm bearish. I'm telling you that if I'm on the sidelines and I see a chart like that, I'm saying, sorry, bud. I'm not touching that thing with 10-foot pole while it could still explode upwards. I understand that the low risk entry was SILJ, whatever, back at 13, 14. It was back then there. So you have to wait for at least you have to wait there for a reset. How many charts? Like we've done many interviews now together. It's like it's a recurring theme there. It's
Yeah.
like this needs to reset eventually. It will reset. It will reset, guys, eventually. And then I could have an opportunity to get in, even at a higher price point. Sometimes that's a tough one to accept. People think they left on the table. I might
But it's
actually
safer. It's
Yes,
safer.
I could enter here. Let's say it goes up sideways. I could enter up here at $35 and I'll be happier than entering here at 26, right? Oh,
Mhm.
that doesn't make sense, Patrick. Well, for me, it does because I know a move up here has a higher chance of repeating a steep acceleration, shortest high rod zone, highest returns in the shortest amount of time. That the chances of having a repeat move like that it's somewhere up here. I don't know where it is, or it's after some type of consolidation pattern. And you save all that opportunity cost, right? You save all that time that it could
Yep.
go sideways. So
Yep.
that's the way I see charts. I'm not scared of buying much higher. I don't care. But as long as the chart setup is
Yep.
presenting me that information there.
Well, and again, I'll reiterate this too. It does two things. I think the first rule of thumb is to not lose money, which it's very hard not to lose money, but it's to keep your losses at minimums. And so you have to identify those targets. And then the second thing really is just it's really just portfolio management or just trading management, this just keeps you disciplined, if you would. And at the end of the day, do you want to make a few extra bucks on one trade or do you want to set yourself up for long-term success? And that's really what you're showing us here. Patrick, talk a little bit about gold because gold is, as well as accelerating, it seems like after our correction. And by the way, when I had you on last, I don't remember if we were about to correct or we were correcting. And because of the stretchiness, and just to
Right.
all my viewers and listeners, we talked about that, not to pat our backs on the pat ourselves on the back too much, but yeah, I want to pat Patrick on the back and ourselves. That being said, we just said we need to see a correction here. We are talking about that. This is stretched. And then gold just shot up as well, but it seems like silver's outpacing gold, but gold is really strong right here as well. What are you seeing?
Well, yeah, so silver's outperforming gold. The gold silver ratio is tanking, which is what you want to see. Yeah, I'm just noticing this chart there on the 8-hour chart. It hasn't broken out yet. So it did break out of this descending line. You got to remember, guys, descending lines are fine. The, but a horizontal line breakout is more valuable because it confirms that you had a higher high a little further back in time, and that's more critical. Here's a wall, uh, support breaks
Hmm.
down, so it becomes resistance, and now we're hitting right there. So 42.50 on the 8-hour chart. I would get bullish see, this would create, see, gold's lower risk entry point would be probably a little up here. So somebody on a very short time frame, right? Because it is uber stretch on the higher time frame. It's just like it's conflicting in the sense that the higher time frame, you're just I don't know. It's like somebody's the expression pressing your luck. You might
Yeah.
get away with it a few times. Like your kid's like talking back, being a little smart aleck, but eventually somebody's gonna say, no, look, you can't. You're gonna get punished. So while this could be, it looks like a bullish resolution. So a close above here, you probably have a move there for gold there. Let me see. There's a couple of measured move targets. At the very least, if that closes, you probably, if it closes above this line here, you probably have a move all the way up to 4,500. But then after that, you have a bigger pull flag. There's this one here that I could add. So let me move that, guys, for you guys. So after that, maybe 5,000 if that breaks out. And then if you would really want to get greedy, it'd be this one here, this huge flag, pull,
Mm.
flag, breakout, add on top. And that would bring us, my goodness, 5,400. So I have a range of
Wow.
targets. If ever we close above here, I have a range of targets. As it's all fine, it's all good. That's on the 8 hour chart. As long as, yeah, as long as this line holds here on the monthly, you're good. You're just
Yeah.
you're fine there. But this is getting ridiculous. I'll just show you how ridiculous this is there. Look how we're above. Where's my here it is. We're above anything we ever did in the 2000s. Now we're in 1970s type of territory.
Right.
There is even here's on the 2 month chart. Even here on the 2 month chart, we're up here there. Look at that. The GFC peak and the end of the bull run, exactly where we are now. There's not much room left, guys. There's not much room. I know people, and often the market they like trapping people at the end with a false breakout. And often these moves always end with a false breakout. So that's why these continuation moves, you trust them more when any, like the 8 hour chart, the daily chart, all the breakouts I could ever show you, you trust them more when here on the quarterly, you're very close to that 36 period moving average, right? Down here somewhere, guys, or halfway through. You trust them more. You just do because the capital flows from the hedge funds as defined on that bigger time frame because they take a long time to really funnel that money into that sector. They're still on the sidelines and they're going to push the price up. They're going to help support those shorter term corrections to resolve upwards. But now those short term corrections, they resolve upwards, but now you're a lot of money has already come in to the sector. So how much more is left until you get a breakout to the upside, but it's a false breakout, then you're trapped. And if people are oversized or they don't use risk and money management, and they'll get trapped, right? Somebody who entered much lower and just wants to add a little bit more, but let's say is fine. But somebody who's right now on the sidelines and dumps 100% of whatever he wanted to invest in gold at these levels, that's just craziness there. It's just
Yeah.
craziness. Look at that. And that's on the quarterly, on the 6 months chart, even on the six months chart there, it's not at the infancy there. There's even resistance here. You could even say that this is going to be a resistance as defined by the distance. On the 6 month chart, your stretch. And even on the yearly, we're up here. It's like even on the yearly chart, and you could see there's a whole bunch of measured moves there. This is crazy, crazy, crazy stuff. I'll remove all my drawings. Let me put my map, my bar pattern. Like this is the move we did since the 2000.
Hmm.
It's like it's done. The entire 70s move, it's done there. It's like we're look at that fractal.
Hmm.
It's, again, I'm going to say it again there. Doesn't mean I'm bearish. People who entered appropriately, they could keep riding this until the daily fails, the weekly fails, the monthly fails. Like they could wait until they find their favorite time frame where it's okay. I've had it. I'm not gonna, go
Yep.
through a multi-year correction if ever that's in the cards. But you got to be wary there of anybody who goes crazy right now and tell you buy, buy, buy. Don't
Yeah.
don't 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 be a wimp. Buy. I hear that on Twitter. There, even for Bitcoin, there people can't learn lessons. whatever happens to Bitcoin is going to apply to gold there. Remember at 125,000 or 100K, keep buying Bitcoin there, guys. Don't be a wimp. It's going to go back up. Sure, it could go back up, but if it's with a chart, you could see if it's downtrending and it's losing momentum and gold's outperforming Bitcoin. Why would you try to buy there? Just buy another asset that's breaking out, like copper. Do you see copper? Copper is starting to break out.
Yep.
Some
Looks
oil,
very interesting.
a lot of oil companies are shaping up nicely. Your eyes should be focused on that stuff. While
Mhm.
maybe if gold and silver take a cooler, then there's other asset classes you could play. You don't need to be married to anything in particular. Just have fun,
Yep.
guys. Be a swinger there. Enjoy.
Well,
Sorry.
it's funny, and this is for another talk, but it's funny Brent mentioned oil, and I'd add natural gas to that as well, but also copper. I was looking at copper this morning, and I'm just looking at the next thing, if you would. I have my positions, by the way. I have a lot of gold and silver and all that, so, and I'm not bearish by any chance, but I just was looking at copper just this morning. That was like looking very
Yeah.
interesting, right? And then also just looking at just the dynamics of natural gas. I think natural gas is an underloved asset, and those equities are really starting to perk up right now. I think oil, I think it's almost inevitable that that's going to rise. I don't know when, but that I think that's almost inevitable that's going to rise, especially the drillers.
Yeah, but well, oil over 100, 150 years, oil, silver, gold, they track. They just track. And now the
Right.
biggest discrepancy is oil. It's just and yeah, oil is just lagging terribly. I don't like saying that the gaps always have to be filled. It could take years. Sometimes oil could go down for a couple of years, silver goes up. But when you
Right.
zoom out there, a lot,
Right.
oil will trend with
Yep.
gold and silver when you zoom out. Look, here's copper trying to break out right here. Uh, Goodness, there's some oil plays like I don't know,
Exxon
Exxon. Yeah, yeah, Exxon. Look at that. Look at that pattern. Holy mosey. Look at that thing. If that
keeps
closes
on hitting,
above,
hitting, hitting, hitting,
yeah,
hitting, right?
if that breaks, it's
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 going
a
to
it's a
run.
crazy yeah, it's gone in a way. If I put adjusted for dividends, it's probably already broken out there. See Exxon. See the target's all the way up here. They're $200 there. Adjusted for dividends. Let's look at that. Yeah, it's already angling upwards there.
Yeah. Very
So this
interesting.
look how it's not stretched from the moving average. Nobody's talking about Exxon because it's almost mathematical. You could even it's like a FOMO gauge. Look, these are low risk entries, not up here. Everybody was going crazy for oil here.
Right.
Down here, silver and the miners and gold are up here now. Guys, forget the fundamentals, all the bullish narratives you hear. They could be true. I'm not saying they're not true, but I'm telling you, this here is it. This is eventually there will be a breakout from here. It's happening right here. There's C and Q there. My goodness, there's this whole bunch of Canadian natural resources. Like even on the weekly there. Let's put on the whole bunch of stuff. Even
Look
look,
at that.
C and Q is already breaking out there. Last week,
Yeah,
I
look
think I
at
showed that
that.
to our members. The breakout was 3 weeks ago. We showed that to our members on the website there as a trade setup. See, it's
Yeah.
coiled and tight. It's paid its price to the piper. It's consolidated. Everybody, deflation, whatever, oil, fine. But if that price is going up of the oil plays, and oil plays don't always track oil. So
Mhm.
there's huge periods where oil plays could go up, like in the 80s or something, then early 90s, they go up, even if oil price is going down. So you got to be, can't put them, but when you zoom out, they do track with the oil price. But this is, you can't be bearish this. How could you be bearish this? It's like it broke out and it's going up slowly. So
Yep.
and maybe this is what's going to happen, to Exxon and Shell there. But as long as it stays above here, guys, no emotions. It's
Yep.
a an uptrend there. So that's a pretty AGQ. Before we close up there, I
Sure.
want to show you guys this AG. I learned about this AGQ, the Pro Share. So that's some type of silver times 2x thing. Look what's happening to the it broke out versus silver there. AG. So
Hmm.
no, this thing usually gets destroyed by silver, but when it does go up, that means this thing's giving you more bang for your buck. So
Yep.
even from here, you would have been probably better to go long AGQ than go long silver. If you wanted
Yep.
like to lever up instead of, I don't know, not financial advice, but instead of going buying futures on margin or option calls or whatever, you could have bought AGQ. And here it's since a few weeks ago, it's been outperforming silver by a margin of 33% there. So AGQ holders would have made 30% more than just holding silver, buying silver. So that's another way to lever up a little bit there, get some more juice on your squeeze on the move up. So are we stretched on the weekly? Yes. But there was an opportunity right here. So that was super bullish. I'm going to look more at this ratio chart. That's super bullish for the for silver when the 2x version of it is able to outperform it, then that's pretty good there. But
Yep.
again, the lower risk entry was on that breakout. Maybe next time. There's probably going to be a bigger pattern in play here eventually. Look at this. I'm always on the hunt to see what's next, right? That's the
Right.
advantage I bring to the table and here. So here, look, see, it's probably going to halt. We're very close. Yeah, look at that. So this is probably going to be the bigger pattern. So if that breaks out, then my goodness, like if you want to expect something like that there. That's your next chance, guys. Whoever missed the
Yep.
train, that's your next train stop. And yeah, I could see it that way. I'm always trying to spot where's the next train stop, and it's
Mhm.
somewhere here there, like above this line here. That's when it's go time there. For
Yep.
those whoever were on the sidelines, they'll get another shot. There's always another shot. I'm not worried. Like I always tell you guys, there's always another shot. Never feel
Yep.
FOMO. There's always, always, always another shot. Always.
Yep.
Don't worry about it, guys.
Yeah, absolutely. Well, Patrick, I've had you on long enough. If people want to do business with you, if they want to follow you, if they want to read your stuff, how do they find you and how do they become a member?
That's right. Badcharts one on Twitter, the fun stuff. But sometimes I'm a little hyperbole guy. Sometimes there's like clickbait stuff. There's no nuance. It's fine. But there are some valuable charts on Twitter. But sometimes it gets messed up with my funny tweets there. Like I tweeted yesterday when I went to the hockey game, and my Uber driver actually asked me if it was time to buy silver. But it's not
That's an
that.
indicator. That's an indicator.
It's a one. But after that, Peter Spino, he said, Patrick, it's only bearish if he tells you to buy silver.
Right.
So,
Yeah, 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 yeah. That's
so,
great advice, actually. Yes.
so we still got some room. So he didn't say buy silver. That I made a whole bunch of money. He's inquiring into buying. So that's like level one FOMO. We're not yet at the DEFCON 4 level of FOMO yet.
Right, right.
But they
Well,
could go or else on the website, northstarbatcharts.com, guys. We have all this stuff. You could talk with us, chart requests, all that. And we have a Black Friday deal that's going to end in a day or two. So if you manage to see this video before the Black Friday deal ends, then enjoy a lifetime 50% discount on this cool stuff there.
excellent. Thank you, Patrick. Thank you so much for coming on in just a short notice. I really appreciate it. Thank you.
Always my pleasure.